Hello and welcome from Trend Signal for our review of the events and the data releases the week beginning the 14th of September. Start of the week, European markets actually relatively strong on Monday, despite the weak Chinese markets overnight. In fact, some fairly weak data. If we just quickly look on the calendar for the releases this week. In fact, on Sunday we had Chinese industrial production that missed consensus at 6.1% versus 6.3% expected. I guess not as a great surprise anymore. We've had a slew of poor data out of China recently, and I think it just underscores the widely held belief that China is indeed slowing down. The impact is slightly muted, really, as the Chinese authorities say they're still on course to hit their growth target. And of course, the market believes them, or not, as the case may be. But it does seem that the market is now accepting China's fate more. If you look at the fall in Chinese markets on Sunday night, Monday morning, the European markets really gave them scant regard, in fact. Really, the focus this week, obviously, and we'll get onto this in a second, is the focus is on US markets, which builds through the week towards the key FOMC meeting starting on Wednesday and culminating on Thursday. Other big news over the weekend is the astonishing result of the Labour leadership contest. A proper landslide reported in a lot of the press here. Certainly the Financial Times had it on their headline, Corbyn picks hard left shadow chancellor, which is not going to help his business of keeping the ex-front bench on side, of course. But looks as if Mr. Corbyn is going to be ushering in some of the 1970s style policies that, well, apart from anything else, will have put a smile back on some of the big union bosses. For markets, what does it mean? I guess it means Labour really has shot itself in the foot, or you could also say shot itself in the head for that matter. Mr. Corbyn has a big mandate, but the mandate is from Labour supporters keen to hear more from this, what was described as a maverick left-wing MP, an MP that has voted against his own Labour whip over 500 times since becoming an MP. So it'll be very interesting to see how discipline is maintained there. For his policies, well, time will tell, I suspect, but I'm sure we'll be seeing a few more headlines along the lines of loony left before too long. Market impact is probably zero, even mildly bullish initially, as it undoubtedly strengthens Mr. Cameron's hand. Although I think the issue over the referendum, the European referendum next year, it does put that in further doubt, as Corbyn is decidedly Eurosceptic, reading the tea leaves there. So let's get on to other things. Markets last week. Equity markets did all right. FTSE recovered 75 points to down. S&P's put on about 2%. Even the DAX recovered just under 2%. The dollar had a torrid time, though. The euro considerably stronger, up over 2 cents. Sterling recovered as well. Some M&A activity underpinning sterling. That rallied to 2.6 cents actually on the week last week. Other than that, gold slipped $16. Brent crude, having recovered quite a lot the previous week, fell $1.27, which is what 2.6%. And this all comes on the back of reports reported in some media about the warnings of a sharp fall in US shale oil production due to price pressures, but that's certainly not evident just yet. So it's all about the Federal Reserve this week, the US Central Bank. They meet this week to decide whether to raise rates for the first time, I think, since 2006, which will be the first change in rates since 2008. The decision is very, very important, especially if they do decide to raise rates. Probably one of the more important events of the year, really. It's described as too close to call by Fed watchers, although the market has priced in a 30% probability of a rate rise in September. God knows, I think the market probably needs it, if only just to remove the uncertainty, because if they don't raise rates this month, it'll be will they, won't they next month, etc., which is not what we need. So let's have a look at the events this week. We've already had the poor industrial production number from China, 6.1%. During this week, apart from obviously the key event that we discussed, we have three central bank meetings, policy meetings this week. Japan, Switzerland, and the US one. Not surprisingly, the likes of Japan and Switzerland, we're not expecting any change there. The first one will be on Tuesday morning from the Bank of Japan. It's possible that they could announce further economic stimulus, financial stimulus in the form of increased QE. That'll be reflected in the Japanese yen, should that be discussed in any way. Other than that, the Swiss one on Thursday morning, but Thursday morning is going to be a very, very busy day, in fact Thursday day I should say, but we're not expecting any change from the Swiss National Bank. They're expected to maintain the negative rates at minus 0.75%. Other than that, we got inflation data out in the UK and the US. Of course, we call it inflation. In fact, it might soon be referred to as the deflation number. We're not expecting inflation nor deflation in the UK, so a flat number at 0.0%, although rumours are flying around that it could be negative, so deflationary. In the US, we've got a core number of plus 0.1% expected on Wednesday afternoon. But before that, we have other data as well. We've got the ZEW Economic Sentiment Indicator, find out what investors are thinking about the market. And there's been a sharp pullback in that consensus number, 18.3, expecting up to 25 last month. Retail sales in the US as well, another very good number that the Fed will have grasp of when they meet, obviously, on Wednesday to discuss their decision on interest rates. But the core rate, plus 0.1%, nothing too much to write home about. Wednesday, sterling markets, we got unemployment data, which will attract attention. We then get into the real nitty-gritty of the whole week, which is the Federal Open Market Committee, the rate-setting committee of the Federal Reserve, the United States Central Bank, will hopefully be telling us what they're going to do with interest rates. Expectations, we've already discussed that. Before that comes out, we've got the Philly Fed Manufacturing Index at 3 o'clock on Thursday, preceded by the weekly unemployment claims. So a lot to digest. Remember also, we have the quarterly expiry on the index and futures and options, so that will also play its part on Friday, on Thursday and Friday on the market. So it could be a very lively end to the week this week, although I think certainly in the run-up to the FOMC, the markets will be reluctant to go in either direction, really, unless something rather dramatic comes out of China, but which we're not expecting, not at the moment. That's it. Thank you very much. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.